Hey everybody, welcome to Trading Capital. It's April 13th. Head market analyst here, Curtis Scouten. Happy to go over the charts with you. Let's jump right into the Bitcoin chart. Bitcoin's very interesting. Right away you can see it's hit our support line here around the 40,000 mark. It actually went a little lower than 40,000 to the low 39,000s, but that is a tremendous fall from a couple days ago where we were shorting it as it ran to the top of the channel. It has fallen roughly 18%. So it is a substantial fall for Bitcoin and a sharp one to say the least. In a way, it has kind of eradicated this whole uptrend, and now you're doing a retrace to see if the bullish momentum can hold. That being said, if we look to see why that was such a pivotal area, when you simply have a trend line connecting from this pivot high all the way intersecting between these two major pivot zones where you had a previous high and then the reversal candle to the downside, and then it intersects with another high and on a closing basis actually, plus your impulse move initial candle to start this up leg. And then when you look at these major closes on the bottom and you connect as many of the closing bottoms as you can, you find your level of support. Again, it's not far off of this support zone here. So if for some reason it gets in there, we will be a buyer as well. But we do expect a short-term bounce, probably at least to test this center point on this trend line, and we'll start looking to potentially skim back our crypto portfolios and hedge them. Full disclosure, we are keeping stop losses now, so we pretty much are in the money for our Ethereum. We're almost in the money for Chainlink, and we're in the money now for Bitcoin. So the important part now on these small minor bounce plays is once you're in the money, you want to protect those trades so they don't go against you. Protecting the profits is key. You never want to be in the money and then let the trade go back against you. It's always a worse feeling rather than to have just been wrong in the first place. So extremely important, tighten up your stop losses. You know, it's going to be your call as to how much you want to potentially protect as your profit. Keep in mind this is a small minor bounce play. This support line is a intermediate minor support level. It's stronger than just a regular minor support level, but it's also weaker than a major support level like this level here. So we potentially could start to flush down, especially if the markets are weak. But nonetheless, the 50-day moving average is going to be your next big test. It also happens to coincide with this big red bar down. So potentially, if you can recapture it, I'm looking for a break to roughly the 44,000. I think that's your line in the sand as to where you want to, potentially hold maximum term. Let's jump into the big indexes, shall we? Starting with the SPX. This was a clear big cap tech rally. The Nasdaq was up just about 2% on the day. The S&P was just about 1.12% according to the SPX here. But notice again how you retraced to this major pivot zone where you had a previous green candle high closing bar. You had another closing pivot top, and then you had this intersection of this red candle, which just so happens to connect with your pivot low made yesterday. If you throw a simple fib retrace on this pattern, you get to see that it was very close to the 50% retrace. But then if you bring this pattern down to the pivot low there, you can see that it really is the 50% retrace that it retraced to. So just slightly above the 50% retrace. So that's kind of dual factors. You have minor support at these pivot highs and your reversal candles and your impulse move breakout, and then you also have a fib retracement zone. So that's a couple dual minor factors and why we should have expected a bounce. Where do I see the upside on the S&P? Well, I potentially think you could maybe come up to fill this gap. That's going to be significant resistance up there. If we throw on the 50-day moving average, you did close above the 50, so whether or not we get confirmation tomorrow, that will be a key indicator. Obviously, the 200-day moving average is coming up very closely too, so that's going to be acting as major resistance. And that really does coincide with that gap fill. In the event that you do start trying to break above and really test, someone would call this a bull flag pattern. I don't see it that way. A bull flag pattern probably would have stopped at this green bar low here. If you were still consolidating above that range, I would say, okay, this pattern still has potential to, you know, break upwards, but you've pretty much negated that green candle low and you've made a new pivot low into support. So this is no longer a bull pattern in my opinion. However, if you do start to break a little bit higher, this is going to be a significant trend line to watch. If for some reason we get into this trend line, that is a beautiful, beautiful short opportunity. Even when we get into this gap fill zone up here, we'll be looking to add our shorts to our shorts. We already started accumulating more shorts. As you can see, we reshorted Amazon today. So the beautiful thing about that is we just covered Amazon around just below 3,100. You know, maybe it was like 3,080 or something like that. I can't recall. And now we're shorting it at 3,100 with a beautiful starter position. And if Amazon floats higher, we'll be happy to add to our short position. We're still in the camp. This market is not out of the woodwork. These rallies, these impressive surges, you know, are very, very strong candles. You typically see that in bear markets when the candles are in nature are very, very abnormally big. And you generally see these power rallies in bear markets, but you generally see smaller floating days up in bull markets. So it's really interesting to notice the correlations of this type of rally that we're in as compared to the 2021 rallies and the 2020 rallies. So be alert. We are looking to accumulate more shorts on this market. Every day this market continues to climb. Every day I get more bearish on it until economic policy is reverted back to low interest rates and stimulating the economy through QE. I cannot be bullish on this market. You know, someone may argue that, oh, some of these tech companies like Tesla and Apple are such great tech companies, they're such innovators. I don't disagree, but our markets are no longer a free market in the sense that the fundamentals don't matter as much anymore, because the main fundamental driver is what our central banks are doing, and specifically the Federal Reserve. So until I see them turning bullish, I can't be bullish on the market. It's a simple matter. When the Fed is bearish on the market, I'm going to be bearish on the market. Don't fight the Fed on the way up. Don't fight the Fed on the way down. Clearly this is a pattern that's in not a healthy pattern, to say the least. We have inflation, you know, at 42-year highs, 8.5%, which is crazy high. Ultimately, those are going to hurt the consumers because companies are going to have to increase their prices. People's wages haven't gone up by 8.5%, maybe a 5% raise if you're lucky. But nonetheless, I have a strong opinion that this market is heading lower. Jumping into the Nasdaq, the NDX here, you can see that we didn't capture the 50-day moving average as compared to the S&P. So that shows a little bit of relative strength. Sorry, a little bit of relative weakness. Again, if the Nasdaq can somehow continue to rally, and that's a big if, the only boost that the Nasdaq is getting is with falling yields lately. The US 10-year was down today. I would have to bring it up. Let me just see if I can pull up another chart here. US 10-year. Whoops. Okay. Oh, that's the wrong one. I want to show you. There we go. So the US 10-year was down today 0.84%, but notice it has come off of its peak, and surprisingly with peak inflation you would expect rates to continue to rise, but I think the markets always price in and know what the outcome is going to be before the news reports it. So I think the high inflation number was already priced in, and we will look at a peak inflation chart, but with yields slightly falling, the Nasdaq can shortly get a little bit of a relief rally to the upside. You do have this short-term gap that is coming up, so I'm in the camp that you do fill that gap. Whether or not you fill this gap up here, that one I couldn't tell you at this point. This first one, I think it's a high probability chance that you do fill it. But that being said, this market is not, it doesn't have much underlying strength to it. You have tons of resistance on the Nasdaq coming up ahead. Honestly, the Nasdaq will get a boost if Apple, Amazon, Google, and Facebook rally. And we are heading into earnings, so I think it's going to be a little bit of a tricky period with earnings because of, these companies pulling out of Russia, stopping business in Ukraine because of the war, potential supply chain disruptions from the Russia-Ukraine war and blockages around Europe, as well as inflation. And it's not a matter of what the earnings per se are going to do to the company. I do think if a company misses, due to the environment we're in, they're going to get shredded on their earnings. But the more important thing to keep in mind, and generally the shenanigans that goes on before earnings and after earnings is pretty incredible, to say the least. And what I mean by that is companies will report earnings, most of them at the end of the day, some of them at the start of the day, which I much prefer. But companies report at the end of the day, and let's say they have strong earnings, which we've seen before, and the stock rallies. And then the market closes 4:30, maybe a little bit of more after hours, but then the 5 o'clock press conference starts. And the CEO gives the forecast, an outlook for the remainder of the year, and it just so happens to be bearish. That's when you see the stocks get shredded, and most of the retail money is trapped in and unable to sell on the bad news. So it's very, very, very tricky when you get these crazy wild swings in earnings from, say, a strong earnings report, and then potentially the forecast for the company is weak. So you have these counter trend forces that often send the stock one way initially, and then the forecast is the final trump card that hits the stock down the other way. And it can work both to the upside and to the downside. You could have terrible earnings but strong forecasts, or you could have strong earnings but terrible forecasts. So you have to keep in mind there's usually two parts to earnings. It's not just simply getting the financials, it's also what are the CEO or the CFO going to say. And with inflation on the horizon, I think they're going to naturally have to take that into account with their product pricing. So when we're living in a lower yielding environment, these companies had stronger pricing power, and now with inflation eating at their margins, they don't have the same strength in terms of pricing assets. But they're a business. They're going to have to, if you don't raise your prices and pass off the cost to the consumer, you don't stay in business. So we clearly know what they're going to do, which means that I do think there's going to be tremendous pressure on the stocks across the board. And specifically, I think the forecasts of the companies ahead, even if they do report strong earnings, are going to be weak. So the Nasdaq, fill this gap, potentially look for more short opportunities. If we fill this gap up here, that would be a phenomenal short opportunity. Just like the S&P, you have this downsloping trend line that will act as resistance as well. In case you start floundering sideways, this would be coming down here. So lots of key levels coming up. I think we're just having somewhat of a little bit of an oversold technical bounce, but I don't think these bounces will last or have any level of robustness compared to this. So just keep that in mind. I do think we're heading lower. Obviously, we're keeping a watch on these critical pivot low areas down here. If we somehow break those lows, watch out below. I mean, that's all I can say is we have a key gap fill down here, which I don't think will be your first area of support. I think somewhere in around these pivot lows, potentially piercing these pivot lows, will be a good level to potentially add up. So tremendous amount of downside ahead. Let's look at the inflation chart and why I think there's downside. So typically when people think there's inflation is rising, that the markets are going to fall. And we have seen that to some sort of a little bit of an extent. But generally what happens in market cycles, and when you look through the previous cycle periods here, when inflation was rising, inflation was rising, inflation was rising, inflation was rising again, and a little bit of inflation was rising again. Typically the markets make their top just before peak inflation, which check, we've made a market top in my opinion, which was the November highs. And then what you generally see is once peak inflation hits and starts to roll over, like these periods here or this period here, once it starts to roll over to the downside, that's when you start to really see the economy start to crater and stocks start to crater and potentially the housing market start to fall. And the reason why this starts to happen is generally when you're dealing with peak inflation, in order to stop peak inflation, and then really there's a difference between stopping peak inflation at these levels and bringing it down to lower levels. Stopping peak inflation means interest rates are rising. Bringing peak inflation down means interest rates are peaking. So noticing those two differences is going to tremendously help your portfolio, and understanding that peak inflation generally signals a top in the market, but once peak inflation starts coming down, that's when rates are typically at their highs and putting the most pressure on the economy, borrowing, lending, overvalued PE stocks, and all of the tremendous metrics that we use to measure the valuations of companies. Those tend to start coming down significantly once peak inflation starts coming down. And I certainly think, based off this 100-year trend line, we are approaching peak inflation. This will be proven in a couple weeks or two, whether or not we break out of this, but it's a 100-year trend line. It's a beautiful one to watch, just to notice how accurate these pivot tops have been in 4 of the last major inflationary cycles. So we'll see if this trend line holds true. I'm in the camp that we have reached peak inflation, with rates rising, with the Bank of Canada raising another 50 basis points, with the Fed set to raise another half a basis points, and potentially, shock us with another announcement at the next meeting. We know they're reducing their balance sheet by $95 billion, which isn't as much as they were expanding on a monthly basis, but I'll take it. It's a start. So I think we've hit the major peak inflation here, potentially a little bit higher based off of this trend line. Here you can see roughly peak inflation is 8.6, 8.7%, depending on how you measure it. So we're very, very close, in my opinion, to hitting peak inflation. So time will tell. Let's just keep reading the charts, keep taking the high probability setups, keep watching the big indexes, and let's start accumulating our short positions once again, slowly but surely. We still have a few other shorts in the market, and as well as a couple longs, but we'll just have to be patient. These down cycles do happen very quickly. Money is made on the turn, so accumulating short positions at key technical areas is going to provide us a great opportunity to make money when the markets do have those ferocious turns to the downside. And you can usually see it starts with a big reversal or impulse move down. You had an impulse move down here, you had an impulse move down here, you had an impulse move down here, you had this big impulse move down here. So there's often a heavy sell day and sell pressure that you can analyze and monitor when that turn in the market starts to occur. But ultimately, I do think that turn is going to be happening, and it's too soon to tell. But just for my curiosity here, when I was looking at this chart, let's just see the simple parallel channel analysis. If we have a channel from that pivot high to that pivot there, this could be a beautiful channel going all the way down, where we could start bouncing off the low range of this channel, boom, and then coming back to the high end, and then coming back to the low end. Eventually, I do think you break that channel lower, but it's just a channel to keep in mind while we trade here, and potentially it may act as a beautiful level of support and resistance, just like Bitcoin has here. We've traded Bitcoin down here, we traded it here, we traded it here. We didn't get this one because we were waiting for it to go back a little bit higher, so we did miss that trade. So we didn't play any of this downside move either. We did hit this move down here, and then we also shorted up here. So it's been a tremendous amount of opportunities. Every time you pick the low end and the high end of the channel, you've had now here 5, 1, 2, 3, 4, 5. We've executed 5 trading opportunities by simply going long and then short, long and then short, and now we're going long again down here, and we're also prepared to go long down here. So that's the power of the channel, just simple parallel channel analysis. Okay, it's nothing too complicated, just very simple, and we'll have to see if this channel plays out to the downside. I certainly think it's going to act as a great level of support and resistance moving forward, accompanying it with other support lines. That's it. I hope you all have a wonderful, wonderful rest of your evening. Stay tuned for more market action. Tomorrow is Options X, so be ready for extra volatility. That being said, most of the volatility I think happened yesterday and today with massive selling and then huge buying programs. I think the price manipulation has truly been on display, and we'll just have to monitor to see how the rest of the price action occurs tomorrow as trillions of dollars settle in options.